Hi, this is Mark with your analysis for the week commencing the 24th of February. Just before we go into this week's analysis, I want to cover some ground from last week and also in answer to members' questions about this continuing move on the British pound. Those of you who were fortunate enough to catch this entry at 157.100 that I started talking about 3 weeks ago, I was showing you midweek how I am now moving my stops by following price. At the moment, this trade is 500 and odd pips in profit, which is awesome, but potentially, as I showed you before with this triangle break, there's a potential 3,000 pip fall here on the pound, and therefore the gamble is you on the one hand don't want to lose a 500 pip win, but on the other hand you don't want to miss out on the chance of a 3,000 pip drop. So what do? Well, this is the same pair on a daily chart, and I showed you in Wednesday's update how I'm in this twice, and those of you who have been with us a while will recall about 3 weeks ago I shorted this pair and I put my stop above 159.100 because I explained it was a 200 pip stop, but I was looking for a 3,000 pip move and therefore that was valid, and I'd entered somewhere down here. Price did get up near my stop and then we had the drop, and then a couple of weeks ago I was saying look for a clear break and close below 57.100, and I explained all the reasons for getting in. So I'm in this twice, and I showed you during the week that one of the ways that you can deal with this as far as moving stops is simply to be following price down. So what I'd done at Wednesday, I'd taken the recent high and I'd moved my stop just above it. So had you decided to do that and then move it down every day, that's one way of dealing with it. However, at the moment, this is last Friday's candle. What I would be concerned about is if price was to pull back to 5400, take me out and then drop like a stone, then there would be lots of tears in the Walton household. So what I'm going to do with this, I'm actually going to leave my long-term move here. I'm in at my full lot size, and I'm now protected. I've already got 200 odd pips locked in here, and if it comes back and takes me out, then so be it. So what I'm going to do is with the long-term move, I'm going to leave my stop there. The other move, I'm going to move my stop down here. So I'm going to go just above Friday's close. But that's one of the ways, from a trade management point of view, is you're having to balance up this fact that, cracky, I'm 500 pips in front, but on the other hand, there could be another 2,500 to come. And there are fundamental as well as technical reasons that I will explain shortly that suggest the pound has got a lot more to go. So those who say technical analysis is mumbo jumbo, well, we spotted this before the fundamental news really started to kick in. This is the Aussie dollar, and again I was showing you on Wednesday's update video how I had just shorted here at 103, I think it was 103.60 I took this trade, and I explained about watching gold and silver. If you've been watching that last week, it did fall and it's broken through major support. What seems to be happening with this pair at the minute, it is bouncing. It was bouncing in an upper area that we'll show you later on a monthly chart. We now seem to be bouncing around here. So you even had the opportunity with this one to short it again on Friday, because 103.40, if you recall a few weeks ago, that was the area I'd suggested for a short, and then last few weeks I've been looking around 103.60, but it's won on numerous occasions until or unless it breaks, and then I continue to look for shorts in that area. Wasn't all good news last week. I showed you in Wednesday's update how I had shorted the euro pound at 8700, and I explained about putting my stop. I put my stop just above the high from the previous week, and what did it do? Price came up, took me out, and then very promptly went and fell 100 pips. Boo-hoo, moveon.com. The real satisfying trade last week was this one. This is the Aussie dollar yen. And if you recall, I haven't had a trade on this for 3 weeks because from the time price broke through here, I was looking for a pullback to 9,500. Missed it by a fraction of a pip the week before on 2 occasions. Remember, I always place my entry 10 pips above an area. So 95.10 I had the order in, the low is 95.1, and by a fraction of a pip, missed the damn thing. Painful, sickener, etc., etc. But Thursday it came down and touched a low of 95.4. We're in with a stop just below the major support and resistance area here. So excellent potential risk reward, and this one is currently 120 odd pips in profit for me. So patience and discipline and waiting for price to come to you is the key to succeeding at Forex. Final one that didn't work for me was the CAD. The CAD, I was looking for a short here. I explained on Wednesday, because it was counter trend, I was only risking half my usual stake, and I shorted at 101.90, and I had my stop just above 102.50, and again it came up horror and took me out. That's a reversal candle on the 4-hour chart, so it might probably, Murphy's Law now, it will drop like a stone as well. But on balance, when you look at catching big moves and being able to manage the trades, once you're in a trade and it's risk-free, stress-free, and you're just managing it and moving it, you are making money very easily. The secret, of course, and the trick is to catch the move in the first place. But you have to accept the fact that along the way there's losses. There are many traders who actually lose more trades than win, but because they're going for longer term moves and big moves, when they do win, they win big time. Right, on to this week's analysis. This is the Euro USD on the monthly chart, and to be honest, the monthly chart's not really telling us a great deal at the moment. Candles close on Friday, on the 1st of March, so do get in the habit of looking at monthly candle closes. On a weekly, we have, last week I was saying a more conservative entry was down here at 3,200. I wouldn't even take that now. The difficulty with the euro is there are Italian elections today, and the Italian, unbelievably, the ex-Prime Minister, who's been in sex scandal after sex scandal, is wanted for fraud and all sorts of trials that are going on at the moment, Berlusconi. There's still a possibility that this lunatic could get re-elected, and therefore, dependent on the result of the Italian elections, the euro could go anywhere. It could go absolutely anywhere, and for me, I'm just going to leave it for the next few days. If it does pull back and it drops like a stone, I suspect that the Fed and the ECB between them are manipulating this, and I would be interested in a bounce back up at 129.00. But for now, I'm just going to simply leave it alone. Pound dollar on a monthly, I've just shown you. Technically, if you were trading this from a monthly chart, you would then be looking for a pullback all the way back up here. Those of us who are in it, hoping it doesn't do that. But if by some miracle it pulls all the way back up here, then I would short again. From a daily perspective, if you've missed this move, then what the heck do you do? There is talk at the weekend that George Soros has started to short the British pound. Now, Soros in the 1990s hammered the British pound, and they had to devalue the pound, and it's claimed that Soros made billions out of it. It's also claimed Soros made billions last year shorting the yen. And therefore, even if he's not going to do it, because the market and traders are starting to pay attention, Moody's downgraded the pound at the weekend. There's been a drip, drip, drip of bad negative news now for months that I've told you about, which is why I suspected this 5,700 was going to break. So we had technical and fundamental reasons. So there's a good chance that the market open, this is just going to carry on and drop. But if you've missed it and you're looking for an entry, then the first port of call will be here around 152.30. It was previous major support and resistance. Price struggled there on Wednesday, pin bar candle Thursday, looked as though it might go back up again, and Friday we've dropped even further. Therefore, look here, and definitely if we get back up to 154.00. This is the Aussie dollar on a weekly, and those of you who've been with us for a while know that we were shorting this at the top area of 1057, and we were longing down here, and for a few months this was very successful trading, just simply bouncing between a range. We've now had a breakout, we've broken that major support area, and as you know by now, major support becomes major resistance. And the other interesting thing that's going on here, all these bounces that were going on were to do with fibs. And what's happened in the last 2 weeks? Price has bounced off the next fib down. So I suspect what's going on here now is we've bounced between 78.6 and 61.8 for 3 months. It could be, by the look of this, that we're going to be bouncing here. So I will be looking for shorts from here again. I will look for bounces back up again here. And obviously that then means this is a target. So if I'm shorting here, then I'm expecting price to stop here, and that would be my target. Same pair on the daily chart. You have other reasons as well to want to short in this area because you've got this weekly 55 EMA in place as well as a daily fib. So there's a lot going on in this area. All the EMAs rolled over, stochastics are down. The one thing that makes you a little bit wary is we have MACD divergence here, but I am only looking to short until or unless we get a break up above 10400. I said to you last week, watch gold and silver. Well, gold has broken a major trend line that goes back to the middle of last year, and therefore it could well drag the Aussie dollar down with it. If you're looking to buy physical gold and silver, this is silver chart, but they're both almost identical at the moment, then if you're looking to buy the physical metal, $26 an ounce is the area to be looking, because look here, it's going back to 2011, and if we scroll back, you even get back to 2010, this was a major area of support and resistance. I don't trade the metals because the leverage on my account is too risky, but I do buy a lot of gold and silver, more silver than gold, and I will definitely buy more than 26. I have bought down at 23, I have bought up at 32, so my average I believe is around 27, but I think silver is a long-term investment, and I think silver could double or treble in the next year or more. So if you're looking to buy the metal, 2600. Gold has broken 1600, it's just been major support and resistance. The next line in the sand is down here at 1520 area. So again, if you're looking to buy the metal, if you own the metal, you have to have the mentality with investing in gold and silver that you just don't watch it all the time, and if it starts to drop, if you're in for the long term, just ignore it, because the more experienced investor looks at this and rubs their hands and thinks, woohoo, a buying opportunity. A more naive, inexperienced investor starts to panic, dump their gold, which is obviously why the price then drops even further. But you've got to be looking at the perspective, this is a buying opportunity. Yeah, it might go even lower, but at the end of the day, you've done your research and you believe that gold and silver are going to go up, and against the fiat currencies of the dollar and the ECB and the pound, all are backed by nothing, then many commentators, including myself, believe that is the best place to have your cash. Euro pound. Don't like this. I don't like it because of the euro situation, because of the election result. And this is just messy. It has broken 8700, then it promptly fell back down. It stopped at 8700. I don't know. And if I don't know, then I walk away and go find something else. Dollar Swissy. 9300 last week I was looking to short. Again, because you don't know what's happening with the Italian elections, and because the Swissy goes in the opposite direction to the euro, if the euro suddenly plummets, this could suddenly race up. If, on the other hand, the euro goes up, this could be the turning point and back down. I did get in this trade, and then I closed it out for a couple of pips loss on Friday because I just didn't like what was going on, and it looked, the scenario with gold makes you think that we could be on for another nonsensical run up for the dollar. But then again in March, I think it's March when the politicians have to make the decision about what they're going to do about the debt mountain again, so the dollar is likely to swing the other way. This is the Aussie dollar yen, and I've just shown you the reasons for taking it 9,500. If it comes back down again, I would do it again. Euro yen. Now this is the euro yen on a monthly chart. Now this candle has not closed yet, but if by the end of the week it's anything similar to this, we're outside the Bollinger Band, this could well be a spinning top, a shooting star pattern, which would signify a big move back down. So again, you would wait till the end of the week, wait for the pattern formation, and then look for clues for trades. At the moment, we're still looking for potential longs at 120.75. Dollar yen and 90.20 was the area. I just shown you why waiting for 3 weeks on the Aussie dollar yen paid off big time. And therefore, if you're going to be looking intraday, then consider longs anywhere around 9200. Personally, I am going to wait for 90.20. And this MACD divergence is almost falling off a cliff now. It's a big clue that this is supposed to be going to pull back. Final one, the CAD. The CAD is at a major make your mind up time. And if the CAD breaks here and closes above, we could be on for a run up. And therefore, again, I have no idea what it's going to do. Walk away. And this is the thing with Forex trading. You've got to learn to pick the weeks when things are in your favour and pick the pairs that are in your favour. One decent trade a week is far better than having 10 mixed ones in a mixed bag and trading for the sake of it. Zoom out, look at the longer time frames. The ones at the moment that strike me as the best potential are the Aussie dollar, any of the yens for a pullback, and the British pound if you can catch an entry. Have a good week.